Andy Burnham just became Prime Minister, and within days his government has started floating a massive change to property tax, and it's going to eat into your back pocket. They're talking about scrapping stamp duty and replacing it with a tax that's based on the value of the property that you own. It's an interesting idea, but the maths on buy-to-let, absolutely brutal. I'm going to be showing you what that looks like, because this is going to cost you. So here's where we are. Burnham campaigned on fixing the housing crisis. One of his big ideas is replacing stamp duty with what's called a land value tax. So basically it's a tax on the value of the land itself, not the property. The government's own estimates suggest a land value tax could be anywhere from 0.5 to 2% of land value each year. So if you think about the £7.1 trillion worth of land in the UK, this could raise 35, 71, up to £142 billion, depending on how this is set. But of course, it could always be higher. Not a one-off payment either, a yearly cost which can also increase. But let me show you what this looks like on a real buy-to-let deal. I'm going to use one of my own deals as an example, then I'll share the real problem with all of this. A 3-bed terrace I bought in Northamptonshire. I bought it for $178,000 with a tenant in situ. In reality, it's worth about $220,000. Land value, you can roughly take away the rebuild cost of the property. You remember that figure your insurance says how much it would cost to rebuild your house if a meteor hits tomorrow, as an example. Take that off the value of the property, gives an indication as to the land value. So for me, that's £220,000 value, £185,000 rebuild cost. That leaves me with £35,000. Let's say if it was 0.5 to 1%, that's about £175 to £350 a year, which is not disgusting. But of course, the longer you hold the property, this is going to tax long-term landlords a lot harder, especially those with 5, 10 more rental properties in their portfolio. Let's be realistic. The government needs revenue. If this is something that they bring in, they might start it aggressive. Some proposals saying they might bump that up to 2%, and that would take my bill to £700 a year. That's another £60 a month on top of mortgage, insurance, maintenance, other taxes. This makes a huge difference to landlords who are already stretched, or people who are just scraping by could see this taking them into the red. If you take that across your whole portfolio, you could be looking at thousands of pounds in tax per year for the rest of the time that you own those properties. The real problem with all of this, it's not just about the tax rate, it's how much it eats into profits, return on investments. What you'll find is people that want to grow their portfolios, their businesses, suddenly they're going to buy less because investments, they're not going to add up as much. Existing properties, they're going to become less attractive to keep, and all that's going to do is get people to sell, and that's going to send rent one way, and that's upwards. Yes, it does free up housing, but what about if you paid stamp duty when you bought? Whether you bought last month, 10 years ago, I doubt you're going to be able to say no to this new tax. Stamp duty, then this new annual tax, it hardly seems fair. So what do I actually think is going to happen if this is brought in? 1, the government's going to pilot this with a low rate, maybe 0.5% as an example. This will allow people to adjust to this new sort of method. It sounds fine. Then over time, it's going to go up. 2, the landlords who stay in the market will likely pass the cost or some element of the cost to tenants, which is going to make rents go up. Burnham's trying to fix the housing crisis, but his own policies might push rents even higher. 3, the people who get hurt most, they aren't the big institutional investors, the property companies, it's individual landlords who are just trying to build wealth with a normal salary. That's the bit that's quite frustrating. Am I running away from the market? No, but of course I'm being a lot more careful about where I invest. Look, this policy might not even pass. It's still in such early stages. It may get watered down. We all know how long the government takes to make changes. But there's enough information out there to tell us that the government is thinking about it. So it's important for you to know, and as ever, play defense when it comes to your portfolio, because if it's not going to be this, it'll be something else. If this was useful, please hit the like button. It genuinely helps the channel out, means the absolute world, means other people can see this content. Hit subscribe if you want to follow along with the journey. I'm documenting everything about building a buy-to-let portfolio in the UK, the good decisions, the expensive mistakes, and all the things that I wish people had told me before I started. But thank you so much for watching, and I'll see you in the next one. Cheers. Bye bye.